Thanks for starting your week with us. Hello and welcome to Business Daily. I'm Lee in Seoul. We have plenty on our plate today, so let's get started with a look at the day's highlights. Although the U.S. Fed chair signals the case for raising rates has strengthened in recent months, many analysts believe a December rate hike is most likely. Robots will soon be able to serve as investment advisors and manage financial assets here in Korea, but there are still concerns surrounding the use of these robo-advisors. These stories and more coming right up. But first, youth unemployment soured in Korea even against a wide backdrop of 34 OECD nations. It was one of just 5 countries that logged an increase in unemployment rates of people between 15 and 24 years old last year, coming after Finland, Norway, Turkey, and the Netherlands in percentage terms. According to fresh OECD statistics, Korea's 2015 youth jobless rate came up at 9.2%, representing a 0.2 percentage point jump, the largest margin since 1999. Meanwhile, the remaining 29 OECD countries either saw no change or decline. Japan and the U.S. were among those that saw a decrease in a trend, led by Ireland, Slovakia, and Greece. A couple of big announcements from the Financial Services Commission Chairman Im Jong-yong on this Monday. Speaking at a financial reform committee, Im said the commission will announce revisions to its IPO and listing requirements for firms sometime next month. He said the key reason is to make initial public offerings easier for businesses, especially those with promising new technologies. Instead of putting a heavy emphasis on a company's sales and operating profits, the commission said it will introduce a set of new standards that also assess the firm's growth potential. Im also touched upon the topic of the country's ballooning household debt, saying it's one of the greatest risks to the Korean economy. He added the commission will work to draw up a contingency plan against potential overheating in the housing market, which has contributed to soaring debt levels. And despite U.S. Federal Reserve Chair Janet Yellen's recent remarks on seeing a stronger case for higher rates, market watchers are saying that the Fed is more likely to pull the trigger in December than next month. Our Kim Min-ji explains.
Could a U.S. rate hike be on the horizon? Fed Chair Janet Yellen said last Friday that the case for an increase had strengthened in recent months thanks to improvements in the labor market and expectations for solid economic growth, raising speculation a hike is in the pipeline. Although Yellen did not specify the timing, she said the U.S. was nearing the Fed's goal of maximum employment and price stability.
Well, she's obviously looking at labor market conditions, and I think specifically the impact that a stronger, tighter job market may have on the prospect for rising wages. So I think she's accepting that economic conditions are supportive of a rate hike.
However, most watchers believe a rate hike will come toward the end of the year, not at the Fed's next meeting in September. CME Group sees a possibility of an increase of 58% for December, while Bloomberg forecasts a 62% chance. This as the U.S. still has to gauge the possible fallout from Britain's decision to leave the European Union, and because Europe and Japan are pursuing negative interest rate policies.
We do think that she's okay with hiking rates sometime in 2016, but the market's perception of what's going on today is that they're more inclined to hike in December versus September.
The Fed raised its interest rates for the first time in nearly a decade last December, but has since kept its rates steady on the back of a global slowdown, market volatility, and tepid economic data. The Fed has 3 more policy meetings scheduled for this year. Kim Min-ji, Business Daily.
And to tell us more about last week and this week's stock market action, we have our Business Daily's markets contributor, Choi Jin-seok, joining us on the phone today. Hello, Jin-seok.
Thanks for having me, June.
All right, let's get started by looking at the Korean stock market. Tell us how things went last week.
On Friday, the Kospi fell for 3 consecutive sessions to close at 2037.5, ahead of Fed Chair Janet Yellen's Jackson Hole speech scheduled later that day. Investors showed concerns about a potential interest rate hike that could come as soon as September. Surging expectations of the Fed's policy normalization hurt overall investor sentiment, causing both foreigners and retail investors to unload their shares. Institutions were the only net buyers on Friday. Meanwhile, the Kosdaq fell by 0.5% to close at 680.43. On a weekly basis, the Kospi plummeted by 0.9% compared to the previous week. Foreign investors had dumped shares for 8 sessions in a row until Wednesday. Foreigners who had bought 5.6 trillion Korean won worth of stock since Q2 unloaded more than 450 billion Korean won worth over the past week.
Then how did the Korean stock market close on the first day of this week?
The Korean equity market continued to fall on the first session of a new week. The Kospi fell by 0.2% to close at 2032. The index once plummeted to as low as 2024 as fears of an imminent rate hike in the U.S. still affected investor sentiment. However, the Kospi market erased early losses as foreign investors shifted their position to buy in the middle of the session. By sectors, major banks performed relatively strong due to expectations that rate hikes in the U.S. might lift bank interest, profits, and overall earnings globally. The Kosdaq market dipped for 3 consecutive sessions to close at 663, down 2.4% compared to the previous session. Both foreigners and institutions unloaded their positions on the market.
Then what are some of the market events lined up for this week? I mean, we are expecting some key U.S. data, which could help markets assess where the Fed will go with its future rate hike.
The U.S. ISM Manufacturing Index released on Thursday local time will carry a lot of weight in terms of reviewing economic conditions in the U.S. and what implications they have for the Fed's policy decisions. Experts expect the index to stay above the level of 50, which shows the country's manufacturing still expanded in the previous month. Also, all eyes will be on the U.S. employment report on Friday. If the U.S. labor market continues to create decent numbers of jobs in August, expectations for an imminent rate hike will rise even further.
Now, we also have auto sales due this week, right? Tell us what to expect and what else is on the calendar.
That's right. We can't overlook the importance of August auto sales in the U.S. Markets project sales figures will be 5.2% below a year ago, adding to evidence that industry sales peaked last year. This is according to consultancies such as J.D. Power and LMC Automotive on Thursday. Finally, we have more Fed officials to keep an eye on. Market participants will be taking a close look at speeches by key members, including Boston Fed President Eric Rosengren, Bill Kashkari from Minneapolis, and Loretta Messer from Cleveland. This has been Chae Janet for Business Daily.
Korea's Transport Ministry has ordered Fiat Chrysler, Ford, and Audi Volkswagen Korea to recall over 10,000 vehicles over safety-related issues. Fiat Chrysler Automobiles Korea will recall over 3,000 Jeep Grand Cherokee SUVs and nearly 2,000 Chrysler 300C sedans over a rollaway problem linked to the gear shifter. In fact, Star Trek actor Anton Yelchin was killed back in June because of this defect. About 2,200 Grand Cherokees and 6 Grand Voyagers with wiring and oil pump defects were also recalled. Ford Korea will recall over 2,000 Mondeo sedans for software errors and nearly 200 Lincoln MKX SUVs with brake issues. Audi Volkswagen Korea has issued a recall on 1 Bentley Continental Flying Spur to address a sunroof detachment issue. Exports of Hallyu-related goods like beauty, fashion, and food products surged in the first half of this year. According to Korea International Trade Association, outbound shipments of these goods reached roughly $6.8 billion in the January to June period, up over 15% from a year earlier. The strong gains were led by cosmetics exports, which rose by nearly 40% compared to the same time last year to about $1.8 billion. The trade association said small and mid-sized firms were responsible for shipping out some 90% of beauty and fashion products as they hold a competitive edge in securing a variety of product groups in line with consumption trends. Well, it looks like the worst is now over with the summer heat, but with the heat wave lasting up to nearly 25 days, the blistering temperatures has sent droves of consumers to pick up new air conditioners. And that trend might actually last for another few weeks. Our Lee Joo-young tells us why.
Kim Seon-hae has changed her air conditioner to a new Grade 1 device this summer, scrapping her old 10-year-long unit. While it was a bit expensive at first, she says it's looking promising on its returns and saved power costs.
It hasn't exactly been a month yet, but based on my calculations for 2 weeks, I think I saved about 50% of my electricity bill.
Air conditioners have been flying off the shelves this summer, selling about 50% more units than last year, of 2.3 million. The popularity has been evident at various retail chains like E-Mart, which saw a 53% year-on-year increase just in the first week of August, while another big box store, Lotte Mart, saw sales in July jump 50%. The government has also helped propel sales, announcing last month it would hand out a 10% refund of up to about $180 for the purchase of home appliances with Grade 1 energy efficiency standards. In fact, Lotte Mart said the total sales of its top-rated energy-saving devices saw a 25% jump last month compared to the same time last year. By product, air conditioners sold 41% more, while refrigerators and TVs surged 22% and 15% respectively.
There are a lot of consumers buying air conditioners and electric fans because of the weather. In particular, a lot of questions are about first-grade appliances.
Industry sources say the market size for air conditioners is projected to expand by as much as $890 million this year, with manufacturers having extended production by 2 to 4 more weeks than usual to cater to the high demand. Lee Joo-young, Business Daily.
Korea's banks and securities firms are no stranger to artificial intelligence, which they use to recommend financial products. And as the government takes steps to fully commercialize the so-called Roboadvisors, they're keeping an eye on security concerns as well. Our Eunice Kim takes a look.
Robo-advisors. They're online financial advisors that offer automated portfolio management advice based on the user's risk propensity, as well as investment purpose, sum, and period of time. The returns on investments from robo-advisors in the first half of the year were anywhere between 1.5 and 4%, making it 2 to 3 percentage points higher than the average returns from the stock market. Requiring low fees and allowing advice on even the smallest sums, more Korean financial firms are offering big data-enabled services. Also, Korea's Financial Services Commission said this week the government will run a test bed for software developers, creating algorithms for robo-advisor services. It's a step closer to fully commercializing the online portfolio management service, which for now still requires human professionals. While rules will be eased, certification will be tightened, such as requiring months-long testing before an algorithm can be taken public.
Algorithms are the basis of robo-advisor development, so there are dangers there, such as bugs in the algorithm itself or deliberate hacking of the system.
Such vulnerabilities include moving the price of a stock by buying and canceling within 1/millionth of a second, or analyzing investment rules to find loopholes.
We're already seeing complex transactions like high-frequency trading and algorithmic trading. Introducing AI in market tracking will help us quickly track down irregular activity.
Indeed, the country's bourse operator, the Korea Exchange, has said it aims to roll out a new monitoring system by 2018, countering artificial intelligence with artificial intelligence. After receiving the necessary approval, it plans to begin building the system in November. Eunice Kim, Business Daily.
And that wraps it up for today. Thanks for watching, and we'll be back tomorrow with more at the same time, same place for your Business Daily. Until then, goodbye.